So the last day of the last trading week was indeed down on the Wall Street, and all the indices has performed the same. Obviously, it led by Nasdaq because Nasdaq was the one which has led the most in the last 2 weeks, and then any short-term correction is not at all a surprise. But then again, Dow Jones, which has not been performing on the upside, has also corrected 0.38%. So let us see what makes it stand on the last trading session and what we can probably see on Monday 6th of February 2023. Now this is the price chart of Dow Jones, and Dow Jones has been trading in between a range. Okay, there is a very skewed range, and when this type of pattern formation happens and price is not moving beyond a certain point, it's an indication that something big is about to happen. Now whether it will happen on the upside or the downside, that time will decide, and it will depend upon the price action. Whether the price is moving up or down, so it will completely depend upon that. But this is what we have here as far as Dow Jones is concerned, and you can clearly see what the price is indicating for Dow Jones. So right now the range that we have here is something like this. So you have your resistance at 34,332, and you have your support, or rather I would say stop loss, at 33,230. Make sure that if you want to go long, wait for the breakout to happen above 34,332, and if you want to go short, wait for Dow Jones to sustain below 33,230, and do not carry forward any positions. If you want to go long, do not continue holding long below 33,230, because it will be a trend reversal in the short term if Dow Jones started falling below 33,230. So that's a risk that will eventually gets created in the short term. So beware about the move and wait for the confirmation if you want to go long on the upside. Simultaneously, for Nasdaq, which has performed the best of the lot, as you can see the kind of move we have seen, and from the lower end of the range, 19% move in a matter of 36 days. So it's been a relentless move that we have seen, and right now, because it has moved quite a lot, let it settle down before taking any move on the upside. Let it settle down. Let us just see what Nasdaq will do on Monday, and then we will take things from there, because it is not wise to just jump in after 90-20% worth of move. I'm talking about the index, I'm not talking about any stock. So the range that we are going to look at for Nasdaq will be 12,290 on the upside, which is your resistance, and we will wait for Nasdaq to at least test its support or previous resistance, which is 11,573. So what I'm talking about is nearly 700% of 700 point or 6% downside move. But this is what we have, because if you are looking at the overall price action of nearly 2,300 points, out of which if Nasdaq gives up 500-600 points, that won't be a surprise for anybody. So it hits the resistance. Okay, it's an intermediate resistance. If you have watched my previous video, I have talked about the specific levels. Nasdaq hits that and started correcting. So the current range we have here is 11,570 on the downside and 12,290 on the upside. So let it settle down, or what else you can do over here, with a stop loss of 12,290 on the upside, you can go short on Nasdaq with a support or with a target of 11,580-570 on the downside. Simultaneously on the S&P 500, because it is capturing the move, and Nasdaq, when Nasdaq is performing well, it is well capturing the move, and here the trend is much better, I would say, compared to Dow Jones and Nasdaq. The trend is much better. A fresh breakout has happened. Here we are not going to do anything. We will wait and watch what S&P 500 will do in the first couple of minutes or in the first 1 or 2 hours of the trade. And there, if we are satisfied that or if the trend makes us feel that if S&P 500 continues to sustain above 4090 and 4100, okay, which was your resistance, now if it works as your support, then we will go for the target of 4320 on the upside. So here the trend is very simple. We will just wait and watch whether S&P 500 is sustaining above 4100 or not, and if it does, then we have a target of 4300. So this is what we have here. Small I would say volatility has eventually been seen, but whether it will turn out to be an event or not, that is something we need to understand. And if you're looking at the overall picture, I would say one thing: volatility will come back again, and will come back in a very surprising manner, and that's why it is I would say it is very wise not to go beyond the range. Just trade within the range right now. Focus on that 200 or 300 point. Don't think beyond that, because as I told you, volatility is there. It is hiding somewhere, and any eventual or any surprising event which we don't know probably flash up in the next couple of days, and market will move accordingly. So this is the end of the video. Thanks for watching.